what we've seen is a continuation of quite a moderate recovery. The Q1 GDP growth exceeded expectation. Entering the second quarter, we show some weakening especially on the demand side, and the economic growth may have slowed in the second quarter. We currently expect a Q-on-Q growth of around 1%, down from 1.6% in the first quarter. But the year-on-year growth may still be quite decent at around 5%, also because the base was quite low last year. But I see a divergence between supply and demand. The supply side of industrial production is now running at above trend level, but the demand side has yet to catch up. And the gap between the two has been filled by export. But it would be risky for China to continue to count on the external demand because of the trade tensions from the US, from the EU. So increasingly, we think China will have to rely on domestic demand. And for that, both monetary and fiscal policy will remain accommodative. On the monetary policy side, the credit growth may continue to outpace the nominal GDP growth. And interest rate cut is possible when the outlook of Fed rate cut becomes more certain and the pressure on renminbi it becomes smaller. And on the fiscal side, fiscal spending may accelerate with the recent faster issuance of both central and local government bonds and the deployment of the proceeds. And the infrastructure investment may accelerate. So with all those policies, on top of that, the property policy becomes more forceful, focusing on the reduction of inventory. With those policies, there is a good chance for the government to meet the around 5% growth target.